Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that overall improves our financial success. Hello everyone and welcome to another episode of Money Mindset. Today I just wanted to clarify a few things when it comes to cash flow or money's being tied in life or in a business or in your investment side of things. If you're finding that there's not enough equity in your investment properties, business could be very tight, people aren't paying. And this episode, I just sort of, what I did is I made a list and just to go over and to sort of reiterate everything that I did in an episode earlier in relations to this. But cash flow at the moment seems to be very tight or it's getting tighter. And a lot of things aren't stacking up for a lot of people. And I did have a few emails for simply people just requesting, hey, can you rejig up an episode on cash flow and when things are tight? So here we go. And I just wanted to sort of explain that when it comes to cash flow, it's probably always interpreted it's all in relation to business, regardless of the size of the business too, right? So you could be a one-person show or multiple employees, or it doesn't really matter. Cash flow is cash flow. It doesn't matter the magnitude of the dollar that you're finding difficult. It can be, hundreds of dollars, thousands, millions, whatever it could be. It's all relative. So realistically, when it comes to business or investment, or even just for your normal bank accounts, it's make sure that more money's going in than what's coming out. So that's basically a healthy cash flow is when more money goes into your account and less comes out, so to speak. So what I would like to do is probably pick off by saying understanding and monitoring your own cash flow. And that sort of means to create a cash flow statement. So this sort of statement document, it sort of tracks what's going in and what's going out. And I find that a lot of people, a lot of clients of mine tend to not really do this quite a lot. They sort of just rattle the numbers off in their head. And I always say, look, script it, put it down and spell it out in black and white in front of you. A cash flow statement sort of, it tracks all your cash flow, right? All the money coming in and the outflow, as in the money going out, over a specific period of time. So you might want to do it as a weekly basis, a monthly basis on how you track that money, and it sees exactly where your money's going and where's it coming from, right? So very important to just identify, and this would help you forecast. So if you project your expected cash inflows and outflows are coming, let's say over a month, it will help you anticipate where and what you can do to plan proactively in order to stop that. So if you find that one particular debt or multiple debts that seem to be running you dry or taking out multiple large sums of money when it really is unnecessary, that's when you sort of have to hit the goal and say, right, I'm going to do something about this. Like I said, more money coming in, less going out is a healthy cash flow, which is pretty basic stuff, right? But we forget to do it and we forget to itemize it and we just rattle those numbers in the head, which sort of can create a bit of anxiety. But always have a look at have a regular review on financial statements as well. I mean, check your bank statements, that sort of stuff. Always have a look at what's going in, what's going out. You might have automated things that are auto-debited out of your bank account, and identify what they're for and make sure that you do need them, and if you don't need them, get rid of them. Identify the causes, what could be causing, higher overheads when it comes in a business. Identify what are those high overheads and what can we do to get rid of them, the higher expenses. Over-investment in inventory, you might have machinery or something like that you have paid too much and you don't really need it anymore. You might have to sell it, that sort of stuff. And really pinpoint the root cause of what is going to cause your cash flow problems. Right, so it also, what we want to do is increase cash flow, right? So now that we've sort of had a look and found out exactly what's really causing the problems in our cash flow, we can also increase our cash flow. So, which would mean to accelerate receivables. In a business, you'd want to make sure that you invoice your clients promptly. Improve your invoicing. You make sure that they're clear and easy to read, so that when they pick that invoice up and they see it, they see it's pretty clear to read, and they don't mind paying it off. It's nothing that they've got to sort through and sort of find that there's issues when they understand the information. Offer multiple payment options too, like maybe if you have a look at accepting credit cards, online payments, direct debits, or multiple sort of variety for them to be able to pay, mobile payments, that sort of thing. Make sure that it's easy for them to pay, and shorten your payment terms. If your current terms are long, like let's say 60 days, probably consider shortening it down to 7, 15 and 30. Now, a lot of my clients always kick back on that and they say, look, this is our industry standard, and if I do that, I might lose clients. But then that being said, if they're finding that 60 days stretches out to 90 or things like that, you may want to consider talking and discussing that with your clients and sort of pre-negotiating that as well. Incentivize early payments, as in the sooner that someone pays, they get a bit of a bonus or that sort of thing. That always helps. And chase overdue payments. Don't always just let them sit and forget. I rang them last month and they didn't do anything about it. Now just leave it up in the lap of the gods. That sort of stuff. And consider invoice factoring. Sort of, it involves selling your invoices to a third party or like a funder that bases finance based on your invoices at a discount to get immediate cash, right? So it's a pretty popular way of doing it over in Europe, I believe, but not so much here in Australia, but it is sort of taken off. Increase your sales, so review your pricing. If you think that you're probably very competitive in pricing, but it's not making you a hell of a lot of money, make sure you renege on that. And also, if you can, expand your services or your products, whatever you are, so diversify your revenue streams is what I always say. And ultimately, without a doubt, is improve customer service and your marketing and promotions and stuff like that, right? Sell off slow-moving inventory, so discounting old stock can often free up cash. Things like that. If you don't need anything and it's just loitering around, it also goes for just in your house for everyday life. Get rid of it, guys. If you can make some money out of it, God bless, and move on, and you get to declutter, right? So also reducing expenses. So how do we reduce cash flow outflows, as in the outflows that are going out? How do we do that? So we identify non-essential costs. So go through all your expenses and cut anything that isn't absolutely necessary for your operations or your living, and just get rid of it. Negotiate with your suppliers, like I was saying before. Try to get better payment terms. And shop around too, right? Especially when it comes to insurance, energy, home loans, of course, anything like that. Investment loans, that sort of thing. Improve your operational efficiency, which are sort of what I mean by that in a business, is to find ways to achieve more with less. So if efficiency is always a key in most things in life. Optimizing your processes to reduce or waste or minimize that too much time spent on something. Efficiency of operations is fantastic. I find that once you find the flow, especially in a process or investments and things like that with cash flow, you often it's 2x your income, really, because efficiency is everything, right? Now, the other thing what I wanted to sort of do, which is more related to business, was probably overstocking in stuff. So manage your inventory sort of effectively, sort of avoid overstocking it or excess inventory. Sort of that ties up a lot of cash. So if you're finding If you run a small business and it's got, you've got stock that you need, you're anticipating you will need in the upcoming months that are quite busy, and you find that the suppliers are finding it tough, and you're trying to measure your productivity in the next coming months, sometimes that can cause overstocking. Just make sure that you sort of minimize that. And often, if you're looking at buying an asset, consider leasing it, especially if it's equipment. Consider leasing instead of outright purchasing. Sometimes tax effective, that can be better. And don't think that the finance is any more difficult. Just speak to your accountant or broker when it comes to that. Very important to identify that also for your business, as in cash flow, right? And also, what I wanted to speak about was financing options, just as in business lines of credit and stuff like that. If your business really needs it, as in business finance, I would consider having a look at multiple. What I find though is quite often when people leave it to the last minute, they're very reactive quite quickly, and they'll just take any offer. Most of the time with unsecured business lending or unsecured loans, it is cost you a fortune, and sometimes you're sort of really not doing yourself any justice, and you're thinking, look, I'll just get the money because I really need it. Just think twice or 3 times or 4 times, speak to your accountant once again, have a look at your cash flow, see if there are other ways of improving cash flow without just getting another loan. Quite often I find that these small business loans can sometimes lead to the demise of a company. It's not to say that they're not great for a company, because they can be fantastic used in the right way, but business loans, tread cautiously, because unsecured or even if they're secured, make sure you need the asset that you're getting the loan for, but you really want to be able to manage the cash flow, right? This is about cash flow on that particular item. So if you're buying a piece of equipment for your business, or you want to take out money or personal to fix up your house, make sure that what you're doing is actually going to pay you. And also, just for your long-term strategies, I really think that the main thing here is to build a cash reserve. I always think an emergency fund. Set aside a portion of profits as a buffer, and always make sure that's at hand. And that goes for your investment properties as well, or business. Manage your debt wisely. Avoid sort of taking out or unnecessary debt, like I was saying, with unsecured loans or even secured loans. Make sure they make financial sense, and explore options to refinance or negotiate better terms. 100%, always agree with that. Also, review temporary finance options. So always make sure that you know what's going on in the market, and finding out what possibilities you have or options you have available in the market there and then. Things change at any given stage in the economy. So always make sure that your advisors or the professionals that you're engaging with business or investments and that side of thing are really on top of that, and they're only a phone call away. And obviously seek their professional advice. Consult with your accountant, financial advisor, business mentor, whatever it may be, because they're always on it. They can provide you with expert high insights in what's going on, and develop a sort of robust cash flow management strategy. It sort of diversifies into areas, or they really get into the nitty gritty of your business, the good ones anyway, and have a look at what they can actually do to refine. Most business or business owners that I mentor at the moment, what we always find is that it doesn't take a lot of time for your mentor, your broker, to sort of get involved and say, hey, this is getting out of hand, what are we going to do with this? They really knuckle down and go through the numbers and make sure that those numbers make sense. And just like what I stated in the episode just now, they go through all that pretty autonomously, and they get a good result, and they make sure that your cash flow jumps back on track. And they also utilize technology, right? How many times these days that I find that some people are still not utilizing accounting software at the best possible way, and that even goes for investors, right? So accounting software and cash flow management tools are really, they automate the tasks. They really provide real-time insights. So if you're up to date with it all, they can really, if you're stressed out and you're thinking, oh, where's the money going, you can ad hoc straight away find out exactly what's going on with your cash flow. So I hope that helps. Look, it's always a bit of it's a bit cliche to say, look, it's a no-brainer, but most of the time when we're caught up in businesses or investments and we're finding in the darkest time or we're running out of cash, we start to really get a lot of anxiety, and that alters our perception, our senses on measuring where this money's going, and it can affect us in multiple ways, right? So make sure that you're always on cash flow. Cash flow is pretty much the blood flow of like your body type of thing. If it's not flowing, then you really got a lot of dramas. But if there's things slowing that blood flow down, as in your cash flow, that's also dramas, right? So always make sure that you're on top of it. That doesn't mean you've got to become the professor of finance. Make sure you reach out to your accountants or your accountant and your advisors, that sort of thing, your brokers, and always keep on top of the market, guys. So implementing those sort of, or a combination of all these strategies that I've just rattled off, sort of can effectively address cash flow problems. And then if you're finding that it's still causing a bit of a problem, then really get into the nitty-gritty, and like I said, hire a mentor or someone that can actually delve in deep, and your accountant might be able to help with that. Hope this helps, guys. All the best, and see you on the next episode.